Good morning, traders. It's Wednesday, June 14th, FOMC Day. Woo! Yay! What an exciting day. FOMC Day is always exciting because they present unlimited opportunities. Where the market can go on an FOMC Day, only the universe knows. Because there is literally potential for a massive move to the upside or a massive move to the downside, because so many participants will be leveraged one way or another. So many people will think that this market is in a bull market and it's going to the moon and they'll be leveraged long. And so many people will think this is a blow off top. And once the market hears Jerome Powell's sobering words this afternoon, the momentum will come to an end and this thing will come crashing and burning back down. So you've got a lot of participants and they are making bets in both directions. And no matter what their thesis, they're going to get an answer today in however the market reacts to what is said in the FOMC meeting. So it is an exciting day, purely because of that calendar event. But then you add on top of it where we are location-wise for the market, having broken out of a very long sideways balancing market and finally getting some excess to the upside. And that excess has not really run out yet. We worked our way all the way down from the lower end of this channel to the upper end, and we haven't come back down. So either the market has got so much momentum that we're about to break even higher, or this thing has got to pull back down. By getting overextended with price, they're basically making it less likely that they will be able to balance off this excess with time. Okay, they're increasing the odds they're going to need to pull back with price because they just keep going. They just keep pushing it higher. So forget the fact that it's FOMC day, just the fact alone of where the market is located and what a big potential move there is either way also makes this an exciting place. So no matter how you look at it, today is the day, baby. Something's going down. All right, so now let's zoom in a little bit, and we'll talk about what we're going to look at in between now and 2 p.m. when the minutes from that FOMC meeting come out and all the chaos ensues. Well, my guess is that we're just going to chop. We're just going to have rotation. I am a little bit surprised that the overnight market was able to explore above yesterday's high. I assumed they were just going to chop inside our range. So that is a little bit bullish to see. But I still wouldn't get bullish on the market unless we got above 42.26, okay? Because so much trade took place inside the overnight market in here. To me, there's a very good chance that even if we poke up into there, we're just going to get smacked right back down, okay? I am assuming chop inside this range right here, basically between yesterday's POC and that node of volume from the overnight. Okay, so they'll push it up and down a million times. Now, if they start to get above that node from the overnight and they find support, I'll get bullish for continuation. Or if we dip down and repair this weak reference at 44.10 and we start getting new sellers there, I will get bearish for continuation lower. But in the middle, I think we're just going to get chop. And probably until 2 p.m. So it might not be the most exciting morning. But as the old joke goes with traders, as soon as you're sure something's going to happen, expect exactly the opposite. So whilst I am extremely confident we're just going to chop here, if something else happens, I will happily jump on that train when it does, and I won't fight it. We got 100 people hanging out. Welcome, welcome. Only 15 likes. Smash that thumbs up button if you wouldn't mind. By doing so, it tells the YouTube algorithm two things. One, it tells the YouTube algorithm to send more people like you my way. And it also tells YouTube to send you more content like this. If you like what I'm doing, push that thumbs up so you can get more of it from other people who the algorithm deems equally high quality. We got a chop zone. We're gonna chop it up in the chop zone. Gonna push it down and then turn it around in the chop zone. Good morning to the $6 million man, Darth Liquidity. Chilling with Dylan. Andrew, happy FOMC day. Infornity. David Glass, good to see you, David. Gino, Maya, ES Trade Monkey, Tim G, Chris, Jay, Mike, 7 Mile Reach, Pavel, Deborah, Nap, Stipsy? Stipsy. Sounds like a name from a Guy Ritchie movie. 2 minutes, Stipsy. You said 2 minutes 5 minutes ago. Frito says more people might not be so good. I disagree. The more, the merrier, as they say. Andrew says thoughts on the NQ. Seems like it's getting pretty bearish. Getting pretty bearish. You and I have a different definition of bearish. Yeah, so NQ is clearly balancing. They spent the entire day yesterday balancing on top of the previous day's range. That is less bullish than the ES because the ES left behind a gap. But you can see both in the overnight 2 nights ago and yesterday, they ran out of momentum when they tried to dip down into that previous day's range. Okay. So that is a sign of a balance area low. We also now have 3 times in a row that the market has tried to break higher and ran out of momentum. This overnight, they tried to fight. Look at how much time they spent. They spend so much time up here trying to get momentum, trying to keep the bullishness, and they could not do it. Barely brought in any volume, and once again, it tapered off. So that is indicative of a balance area high. So what I think you're looking at here in the Q is just some good old-fashioned balance. Market pushes up, pushes down, pushes up, pushes down. And it will likely do that until 2 p.m. Now, if they were able on the NQ to push above that node in the overnight, much like with the ES, if they got up there and found new buyers, well, they could change my mind. And up there, I could become bullish. But for now, I'm assuming chop. I'm looking for a chop zone. Chop it up, baby. Chop it till Powell speaks. Speaking of chop, we've got 2 week references above that we left behind yesterday on the ES. Weak references are just things we notice on the market profile that tell us the market might need to revisit that level once again. So the first is a weak I period high. It was weak because it stopped at exactly the same location as the H period high did. So that tells us that likely some people left their stops just above there, and that at some point the market will want to go back up and fill those stops, right? Take out that liquidity that's waiting. The same thing happened in the H period with the D period high. And so we call that a poor high because it was the high of the day. And we also would assume that there are some stops up there. So we know there's resistance because the overnight market couldn't get any higher. And we know there's a magnet tugging on price here and a magnet tugging on price here. So it shouldn't really get us bullish to poke up above yesterday's high. Only bullish if we find new buyers up there. Because we could poke up and repair those references and then just come right back down. Which to me is the higher probability. Darth Liquidity says, are you ready to sit on your hands? Yes, sir. But we know that. We're ready for it, right? Like we know that everyone's in anticipation of those notes coming out at 2 p.m. So if nothing happens, we don't need to go crazy. We expected it. And if something crazy does happen, well, then we know to pay attention. And when what should happens doesn't. It's like magic. All right, so there's the first week reference from yesterday repaired. So the first magnet is turned off. We still got one more up at yesterday's high. We're watching the volume over here. We're paying attention for what we call taper. You can see at the high of yesterday and at the high of the overnight how the volume tapered off. There was less and less and less the higher it went up. So as we get up above yesterday's high, if we want to find out, is it just a repair of the poor high and they're going to come back down? We want to look for that taper, look for that volume to fade off. All right, there's the repair of the poor high from yesterday. So we've now turned off those two magnets that were pulling on the market. And we're right back up in that zone where we got resistance in the overnight. So let's see what happens with the taper. If we run out of volume, well, we're turning around and heading back down towards the halfback. Hey, Roddle. Thank you for the sub. Welcome. T says, could you please show the Nasdaq order book zoomed in? I assume you mean on the Bookmap. Looks like chop to me. Ugh. It's just a bracket bot on either side of the market. All right, the high today at this point only has 10 contracts that traded, and the low only has 21. Anytime I see less than 100 contracts at the high or the low of the day, I generally assume that's low volume and telling me they need to do some more business there. Seeing that we have a low volume high and low on the day increases the odds of further chop. Scott says, hey, Charles, missed you in my life. Always glad to catch your streams. Good to have you, Scott. I'm doing Monday mornings on Bookmap's channel. If you ever miss me, just come visit on a Monday morning. There you go. Okay, so now we're back above yesterday's high. We did bring in a little bit of volume. We had that little node right there that just built as support. So I'm not bullish, obviously, but that is a first sign. If the market was going to get bullish, you'd start to see support there at yesterday's high. So I personally don't think it's going to hold. I think we're going to pull back, but I am making note of it in case it does. John says, so bold, so beautiful, so Pappy. I know, I can't wait. I feel like it's been a minute since we watched a Pappy talk. Okay, so once again, testing that high from yesterday. Can it hold as support? Wanted says, what is the point of a bracket bot? It follows the current price with distance, so it will never get filled unless there is a huge stop run. You got it. It's there in case somebody tries to shove the market. It can stop it and hold it in that bracket. But as long as the market is gently drifting, it doesn't care. It's those big shock moves it's trying to prevent. Gap up on the Russell. Wow. I would say the Russell, unlike the ES and NQ, is still in its multi-year long balance here. And they are right at that upper end and totally overextended. But again, nothing matters until 2 p.m. And then we find out. And everyone's plans go right out the window. $6 million man says, well, I made my day. Bought the overnight low support for ES. I assume you mean for contracts ES. Might call it now. That's a great idea. But come back at 2 o'clock because it's going to be a show. Don't miss that. And by the way, we'll be streaming live right here. Got 108 people hanging out, but only 61 of you have given me the sacred thumbs up. Please gently push that thumb button. I sure would appreciate it. If you don't like the show, you can push the thumb down. That's cool too. So again, I'm going to repeat the exact same thing I said before. Technically, we are getting support at yesterday's high, which should technically be bullish, but I believe it's all a game. They're just trying to get you long, so you'll put your stop down there inside yesterday's range. Okay. So yesterday's high breaks, we are in a chop zone, now confirmed. How's it confirmed, Charles? Well, where did the volume taper off? Where did we get less and less volume trading? Right exactly where we did in the overnight, right exactly where we did yesterday. So that tells me that what was happening yesterday, what was happening in the overnight, is likely still happening. What was happening yesterday and what was happening in the overnight? Chop up here, grinding around in this range. So I suspect we're going to do more of that. So my next focus is going to be halfback here at 44.20, and I'm looking for support there. If they can find support at halfback, they can take another poke at the high. If not, they'll come back down as the chop continues. It's a chop zone. Deborah says, hi, new to watching you, and I was wondering, how do you use the tick chart in your trading plan? Well, welcome, Deborah. We're happy to have you. Yeah, so basically, to walk you guys through quickly, for those of you that are new to the channel, must be at least 12 of you that are new, to walk you through basically the way I approach markets. So the way I trade is I first want to understand what the market is doing. Okay, so every day when that opening bell rings, I have no idea what I'm going to do that day, what trades I'm going to take. I'm waiting for the market to tell me, what is it doing? So once I feel I have an understanding of what the market is doing, I think it's going to go up, I think it's going to go down, or I think it's going to go sideways. The next thing I do is I look for an opportunity to trade that thesis that I have, right? So let's say I am not, but let's say I was bullish right now, right? Well, I would be wanting to buy the overnight high, and I'd be looking to put my stop below the halfback, right? Of course, that is not a trade I'm getting in nor recommending, but I'm saying to explain it. So if this morning what I was looking for was I was bullish and I was looking for the market to push up above the previous day's high and find support, I'd be jumping into the trade, okay? So that's how I approach markets, is I'm just asking myself all day, every day, what is the market trying to do and how good of a job is it doing? When I feel I understand how good of a job it's doing, I look for an opportunity to get into a trade. If both of those stars align, if I both understand what the market is doing and it gives me a good entry for a trade, then I enter the trade. Okay, so that's how I approach markets. So then what do I use to answer the question, what is the market doing and how good of a job is it doing? Well, that's what I use the stuff on the screen for, okay? So my main focus is the market profile chart. That's essentially the price action. What is the market doing? And, where is it doing it? How is it doing it? Who are the participants? All of that comes from the market profile. I then use what you see over here on the right screen, the the Bookmap software. And what you see behind here, the what are called the market internals, as a way to confirm or deny what I'm seeing in price action. So here's a great example. In price action right now, the market is finding support at the previous day's high. So the price is telling us it's bullish. It's also telling us it just created a poor high. So now there's another one of those magnets up there pulling on price. So I can look at the ticks for confirmation. So from this moment, when the price action is telling me something bullish, I can then say, where are the ticks right now? Well, great. They're right on that zero line. So what happens from here? Do those ticks pop back up, or do they break lower? Depending on which of those things happen, I'll know whether this is trustworthy support that I should be putting in a buy order or not, right? So the internals and the Bookmap are just confirmations for what I see in price action. The way I use the internals specifically, the tick chart, is that I look for where it is in relation to the zero line. Okay. So is it above or below the zero line? Above is bullish, below is bearish. Okay. Because above means more buyers, below means more sellers. And what does it do in relation to that zero line? So once it gets back to it, does it break up or break down? When we run out of buyers, do more buyers step in or do more sellers step in? So if you go back and rewatch the first 5 minutes, what did I say I would need to see to get bullish and assume we weren't going to chop? I would need to see the market push above this node and turn it into support. So am I bullish right now? No, sir. Why? Because when we got above it, boo, instantly ran out of business. So they're trying right now. The buyers are really trying to build that momentum, but they're not doing a very good job of it. So what is more likely to happen is they're going to run out and then come back down. Now, if those ticks hold that zero line, and if the market keeps going and keeps bringing in new buyers up here, well, then I'll get bullish. But as long as I keep seeing the taper, we saw it earlier here, we're now seeing it again right now, that tells me fewer and fewer buyers the higher we go. Ticks are also telling us that, making lower highs, fewer and fewer buyers each time. All right, there's a test of the overnight high. There's some short covering, some stops up there. Same exact thing for NQ here. It's pushing through this node. Again, to get bullish, they got to turn that into support. So this still looks like chop to me. I know it doesn't feel like it. All right, so they got above the overnight high, and they are starting to bring in volume up there. They are also holding the ticks above the zero line. So that is bullish to see. So if when they pull down to this node from the overnight that I was talking about earlier, if they turn that into support now, I will become a bull, and I will assume they can keep that momentum going. One says, what about the VOLD and ADSPD? These, the breadth and the advanced reverse decliners, they're not really helpful when the market's in a chop zone. They're much slower indicators. They'll be more helpful in the afternoon. When you're in a chop zone, it's just the ticks and basically price. How does price react to the previous high? How does price react to the overnight high? How does price react to the halfback? That's all you get when it's a chop zone. And there's a reason for that. I limit the way I look at things because it makes it more successful. When the market is more complex and harder to read, you have to simplify the way you look at it to be more effective. So when the market is in its most complex, most difficult way to read, which is a chop zone, I look at it the most simple I possibly can, which is what happens at previous highs and lows, and then what happens when it comes back to support. And everything else just becomes noise beyond that. Wanted says, where do you see support? High volume nodes. There are a lot of different places for support or resistance in the market. I really can't list them off. There's like so many, but generally, yeah, high volume nodes are the most reliable, or previous highs and lows, or other market profile references. So like the halfback is very reliable. The opening price is very reliable. The previous day's opening and close is reliable. So there's a bunch of different support resistance. But the long and the short of it is you just pick the one you're looking at and then see what happens when it gets there. And if you're right, if you picked the right spot, for whatever reason you picked it, it'll work. It'll stop there and it'll bounce for a little bit. And the more and more you do it, the better you'll get at recognizing that support and resistance. Man, I feel like I'm beating a dead horse here. I still don't trust this support. Again, they're doing it. The bulls are bringing in the buyers at the high, meaning they should be able to give it another push. But it doesn't feel real to me because they're not letting it pull back. Maya says, do you have any videos on how you set up your TPO chart? I've gotten used to understanding yours. If you get Window Trader, which is the software I use, I've got a template in the Discord for the Pirate Traders Brigade. And you can just double click on that and it'll open it up and automatically import those settings. Garrett says big sellers need accumulate enough volume above previous high. Exactly. They get shorter term traders to go long and put their stops. And then they get in their short contracts. They take the market lower. And then those stops getting stopped out pulls it, creates that momentum. But for now, the bulls are winning. I can't believe it. They're holding it. Watching those ticks. If this tick bounces now and pops back up above the zero line and turns green again, that means these are real buyers buying the market for whatever reason. Scott says, I hate this. I don't trust the long, but it is the direction it's going. Can't go long up here. I don't trust the support. My hands are going numb from sitting on them. I know. Well, that's the morning we expected. We expected for a choppy, annoying, difficult morning that would get as many traders chopped up as it could. So that come 2 p.m., the market is free to do whatever it wants. I'll be damned. Look at those ticks. I can't believe I'm saying this, but it's bullish. That is not me suggesting you jump into a long trade. I don't know how far they can push it, but they've got control. I cannot believe it. New buyers at the high. ASL says never give up, trade hard. I'm about to give up on these buyers. They work so hard to hold this high and they're getting nothing for it. Can you take me higher to a place where the lungs get squeezed? This might be it. So even though the price is holding up here, which is telling us there are, excuse me, tells us there are buyers, what are the ticks doing? They're continuing their momentum lower. They came back up to the zero line. It looked like they were going to break higher, but then they told us, nope, we're breaking lower. So that means most of the buyers up here are actually shorts that are covering and not necessarily new buyers. Now, I will remain bullish because they were able to come in here and buy as long as we're above the halfback, 44.22. But if we pull back through the halfback, we're just going to get another couple hours of chop. And this will have just been to, take out those stops and come back down. So while technically this is the definition of bullish, this is about as least bullish as I've ever been, because I'm pretty sure they're gonna fail. GT says the halfback is half your profile. Exactly right. Yeah. So halfback is 50% between the high and the low of the day. So half the day's range, whatever that is so far at that moment. And it works a lot like Fibonacci. It's one of those magical levels. It's like, why do stores have specific numbers that they put up for sales? 25% off, 35% off, 50% off. It's like there's these exact numbers where people just like to do business. The 50% retrace of the day's range is just an area where people like to do business. Speaking of which, that's where we're going now. Looking for support. right here at 44.22. Scalping strategy says, Charles, too bad you're not trading the NQ. It gives you so many ticks per day. NQ is trending so well. Is there any reason why you don't trade the NQ? Most days the NQ is trending one way or another. If you are right and the NQ is trending most days, point it out to me. On days where the ES is just being choppy and rotational and difficult, but the NQ is being super easy and just trending, real easy all day, point those days out to me. If you start to point out those days again and again and again, I will consider switching over to the NQ. The reason I don't trade the NQ is before I was as good as I am now, when I used to try to trade the NQ, it was just way too volatile for me. So the amount of volatility, the number of points that it moves up and down in any particular move would just cause me to get so emotional. I would get FOMO to jump in a trade as soon as it would make a move, or I would chase trades, or I would, get stopped out again and again because I would use stops that were too tight or whatever. So for me, I just find trading the ES much easier because it's less volatile and it's more, like the patterns are more reliable. But I feel like I'm probably at a skill level now where I could take another stab at the Q. So if you can prove it to me by pointing out those days when the ES is hard, but the Q is easy, I'll switch teams. Patrick says scalping is right. I've been on the NQ for the last 3 or 4 weeks and we're making way more points. Yeah. You're always going to make way more points. Okay. But can you handle it? Can you handle those extra points when you're wrong? That's where I had the problem. Patrick, I've been losing 20 to 25 at a time, but winning 50 to 70. Hey, man, you have intestinal fortitude that I do not. I'll put it to you that way. I suppose I could do 20 points. But to be able to sit through a 20-point loss, I'd have to think I could make like a 100-point return. Okay, so as we print the C period here, the market is setting us up to give us some more information. So as I said before, if they cannot hold the support at yesterday's high, at the halfback area right here, then no matter what, I assume it's a chop zone and we're just going to go up and down. But then also, if the C period were to break the B period high, the market would then be trending higher. So that would be another reason to truly be bullish and assume they can keep it going. So hopefully within the C period, we'll know for sure. Are we looking at chop until 2 p.m. or are we going to do a little trend? Do we want to try to poke up to a new price before then? Patrick, you're such a recruiter, bro. You're always trying to recruit people. Now you're trying to recruit me into the NQ? Come on over, man. The water's warm. Just dip your toe in. Garrett, multiple times today, you've tried to ask me about how much money I make. So I'm just going to tell you my philosophy on that. I don't talk about it. I never will. I will die one day and none of you will ever know how much money I have. And my reason is simple. There's no benefit to you whatsoever. You might say, well, it will inspire me. Charles, you will inspire me to know if you can do it, I can do it too. Well, you can be inspired by the way I read the chart every day. Just read charts as good as me. The rest will come along. But what is more likely is that it would cause jealousy. It would cause negative emotions. And that's not going to help you with your trading. It's not going to help you at all. The good news is, for you, you don't have to compare yourself to anyone else, ever. It doesn't matter how much money anyone out there is making on any given day. All that matters is how much money you made today compared to what you made yesterday. How much you made this month compared to how much you made last month. You are only in competition with yourself. And any energy spent wasted worrying about how much money other people are making is energy you could have put to making more money for yourself. That's my philosophy. And I'm sticking to it. Percy says, but you could inform us how often you are right. I'll tell you how often I'm right. 50% of the time. I am right about half the trades. Usually I do better than that. Usually it's 60 to 70%, but for sure, 50% of the time. Well, Charles, how do you make money if you're only right half the time? Well, because I have very strict risk management rules. And as long as I always follow my rules, as long as I never once break them, I only have to be right 50% of the time, and I make enormous profits. Garrett, you're missing my point, dude. The answer to your question will help you how? How will you make more money with that information? So take the time that you're using to type your question into the keyboard and glue your eyeballs to the screen and learn something. Get better as a trader. Focus on yourself, your skills. You get better. That's how you'll make more money. Any time or energy worrying about what somebody else is doing is a waste. I see it over and over again. People so much smarter, so much better disciplined, so much better, so much less, risk averse than me, who could be amazing traders, and they never make it, and they fail because they just focus on the wrong things. They're too focused on how much money everybody else is making instead of just focusing on what you should. Your own performance. That's all that matters. Deborah says, would I choose to be long if the price comes down to the support? Any other day? Yes. Literally any other day, I would be long right now. I'd be buying the overnight high at this exact moment, but not today, because today it just feels too fishy to me. The ticks are telling us that it's just short covering up here, not new buying, right? The taper is telling us we're getting less and less new buying. And just the fact that it's an FOMC day tells us that it would make no logical sense for the market to make some big move right before the FOMC. So any other day, I'd absolutely buy the living heck out of that, or I'd be long right now, but not today. Today, I'd rather just sit back, relax, and use what the market does to give me information about what to expect later on. And right now what I expect is they've got a lot of short-term traders long at the high, just fixing to get squeezed whenever they pull it down. Wanted said last FOMC, they faked the move up pre and then dumped at the release. Yeah, and they often do it literally like in a matter of minutes. So they will often, like FOMC, let's say hypothetically it was 2 p.m. right now. You'll get like, the market will start to make those moves, and then it'll make like one big crazy move one direction, and then come back down and grind and grind and grind and grind and grind and grind and grind. And then at 2:30, when Powell starts to speak, then it just goes do. And I've seen this so many times, and you're just like, oh, fuck, everyone just got wiped out. And then they took the market 100 points the other way. It is truly breathtaking to see. So never, ever, ever trust the first move that it makes after 2 p.m. It is almost always a fake out, and it can be a vicious face melter. Okay, well, again, I just can't believe I'm saying this, but the market is now one time framing higher, which is bullish to see. I don't know who the heck these buyers are or what they're thinking, but they're buying. They have the momentum. Gino says, I rarely trade the ES. I simply choose this group to the camaraderie of the people involved. I will admit, though, I've learned enough to make trading the ES comfortable. Well, there you go. Welcome. Scalping strategy to use window trader. How much do you spend monthly? So it's like there's different versions of it. If you get the light version with like the cheapest data feed, so if you get the light version with bar charts, it's like $250 total. If you get the full version with the most expensive data feed, IQ feed, which is what I have, it's like $400 a month total. And it's like I tell everyone, you don't need Window Trader. Window Trader's the best, but you don't have to have it. Any market profile software is fine. So unless that, $400 a month is coming out of your profits, might consider other options. Jay says FOMO. I assume he's responding to who are these buyers? Yeah, I mean, you're right. They're day traders. They got to be. They're short-term traders who just can't help it. Like I said, if it wasn't FOMC, it would have been me. I would have been one of them. This is how Rome fell? What, getting itself overextended in wars all over the world? Salt futures. I'll have to look that up. I'll have to Google that. Will says he's mesmerized by natural gas. There's a joke in there somewhere, but I would have to find the 8-year-old in me to figure it out. For those of you that are new to the channel, we've got something that we call a bot shenanigan zone. It's basically just an area where the bots kind of keep the market stuck in a range and they bounce up and down and up and down in that range. And the purpose is to get short-term traders long and short. They push it up a little bit, they get them long, they pull it down, they get them short, long, short, long, short, long, short, long, short, long, short, so that they can eventually break it. But I would say that's what we have here at the overnight high. All these buyers seem to be computers. Shenanigans are afoot. I just realized I've been talking for 5 minutes with the microphone muted. Good times. All right, so only 84 likes, but we got 107 people hanging out. So the question is, do you want support here at the overnight high for another push to the upside towards 44.34? If so, smash that like button right now. Give me a thumbs up if you're looking for that support. Okay, we got 6 people. Excellent. 6 out of 120. So now if you want this support to break and you want the market to pull back down, smash that like button. If you're trying to bring these shenanigans at the overnight high to an end, smash that like right now. Wait, somebody undid their like. I saw that. I saw that. Okay, so 6 people. Oh, we just lost one. Okay, well, I guess only 5 people want to see this sucker break and head lower. So generally, if the shenanigans are going to come to an end, the last poke, we won't get one of these icebergs once again supporting the market. It'll come down, and even if it gets support, it won't have that little iceberg. Then you know the shenanigans are over. If it comes down and it gets another iceberg, boop, boop, the shenanigans shall continue. Truman says, is price trending when the price is 2 TPOs over the previous period high or 1? So it's 2 TPOs, and it's when the C period breaks the initial balance. So we think about the first hour of the day, that is the A and B period, as if it is just one big period, which is basically just that first hour of the day where the market's trying to figure out what it wants to do. And then whichever way it breaks, whether it breaks the high by 2 ticks or it breaks the low by 2 ticks, then that means that's the direction the market is trying to go and it's trending. From that point, as long as it continues to make higher lows on the 30-minute, we assume it's going to keep trending. And if it comes back down below a previous low, we know that trend has ceased. It has come to an end. All right. Might be ready for the shenanigans to end. So they tried to hold it up with one more buy iceberg, but they couldn't. It broke through. And now they're turning what was support into resistance with that sell iceberg. So we might finally be ready to make a move here. So again, for those of you playing the home game that have just tuned in, it's a very tricky thing to explain, but here's my best attempt. Right now, the highest probability is that the market wants to keep going up. Okay? If it gets down to 44.22, which is what we call the cessation of the trend, well, then it is telling us exactly the opposite. It is telling us it cannot keep going up and it's got to go down. If that were to happen, I would assume the market's just going to go sideways until 2 p.m. But right now, at this moment, they do still technically have that trend, still have that momentum. So whilst I don't personally have enough confidence to get long anywhere in this market, as long as they still have that trend, as long as the C period low stays above the B period low, I will not short it. Okay? So that means I must just sit on my hands. I either go long with the trend or I sit on my hands. I can't go against it. That being said, I have a feeling we're setting ourselves up for a boring couple of hours here. Truman says, do you only pay attention to the lows once you have a trend? Yes. So once that first TPO pokes above the previous high, from that point on, the highs don't matter. So let's say right now we printed the D period. Okay. And then the D period started to push up, and then the D period stopped right here, and then it came back down, and then we printed the E period right here, right? It wouldn't matter that the D period made a lower high. All that would matter is that it made a higher low. So we would still be trending as long as that E stayed above that D, and so on and so forth. And this can be very potent because sometimes the market will balance like this. So it'll spend some time and it'll get in a tighter and tighter range, but it will keep making those higher lows. Well, then you know the highest probabilities it's going to break higher. And of course, it's the inverse if it's a trend down. Truman says, is one of your plays to go for a low risk long just before cessation or a low risk short just before cessation? Yes, it is. But again, I would not do that today. There's too many factors that are off today, as I've been discussing all morning. And so for those reasons, I don't want to get in any trade. I just want to wait till 2 p.m. and see what happens. But yeah, if it were any other day, right now would be the most gorgeous opportunity. Because you could get long right down here with almost no risk. And if it works, if they head back up and they break that C period high, you're risking 1.5 points to make whatever, 8 points. That's a really good risk reward. So yeah, I mean, this would be a great one-time framing trade any other day, unfortunately, than today. All right, moment of truth. Can they hold it? If that D period low dips 2 TPOs below that C period low, that is half a point, then the trend is over. And that would increase the odds that the market needs to pull back and will probably go sideways. In correlation with the fact that we got the FOMC today, I would assume we're going sideways until 2 p.m. So moment of truth. Can they hold that C period low? Or is this momentum finally going to come to an end? Shenanigans. George says, hello, I'm new here. Is there a paid subscription? I know this is a free live stream. Oh, George, welcome. I love that question. Yes, there is a paid subscription service. I run a community called the Pirate Traders Brigade. And if you wanted to be a member of that community, it costs $10 a month. And as a member of that community, you get access to the Discord, where everybody hangs out, shares ideas, and the live streams, where every morning, just like this, I hang out and share my thoughts on the market. So if you wanted to hang out with me every morning, you'd want to join the brigade. Link in the description. All right. Well, my respect to the bulls. They are keeping the trend going. So they're out of that bot zone. And those last few pushes were not icebergs. Right? The market has made that move without an iceberg now. So it can keep it going. All day long. All day. All right, so we got some previous resistance up here around 44.34. It's not that level exactly, just this general area. So we'll see how the market handles that resistance. Chris says, are you paying attention to the market behavior volume profile as of April 2022? I'm asking because we are currently back in this range. Yes, sir. And I've got my levels marked. I just made a post about this yesterday on Twitter. So we've re-entered the area before the 0-day option bots went to town on the market. Those are less than a year old, you know? And so if you look at what the previous market when we were in here looked like before. How many green things do you see? Barely any. A couple of weak references, but mostly it's all just single prints, single prints, single prints, single prints, as you would expect when the market's making momentum on its way down. But now let's just scroll on up and see what we've left behind since we started the 0-day bots. Just weakness, 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 more and more everywhere. Weakness, weakness. It's just hilarious to me how like the markets have fundamentally changed. It's all about those 0-day now. And they have literally changed the mechanism of how the market moves. And you can visually see it now that we're back up in the range from where we used to trade before all of this. Very interesting. Truman says, are icebergs and stop hunts algo driven? And do 0 DTE bots bring higher volatility? It's not that they brought higher volatility. It's that they changed the behavior of the market. There's a way the market used to work and it used to move. And then they started with these freaking bots and now it moves different. It just functions differently than it used to. And so I'm merely commenting on how different the chart looks now that we're back in that area where it used to function differently. But it's hard to say more or less volatility because the market was different, right? You're talking about, you know, being in a bear market where the market was collapsing versus being in a sideways market where the market was going sideways for a year or two, you know? So it's hard to measure volatility of one versus the other. But certainly a behavioral change in the number of weak references. As for the icebergs and the stops, so there's two different things that are happening when you see an iceberg in the Bookmap software. One thing is that it's a human who has very large size and has decided they want to buy the market. So they say to their computer, hey, market, I want to accumulate X number of contracts at around this price. I don't know, whatever they use. And their computer sets about the mission of accumulating whatever position they want to accumulate. When the computer does that, we will see it as icebergs. Okay. So that's one thing you're seeing there. The other thing you're seeing is automated trading. So that is software that is running on its own set of programs, doing whatever it does. And there's millions of them and they're all doing their own thing. There's some of them that are bots that are trading on a minute by minute basis, very tight ranges. There are bots that are trading larger ranges. There are bots that are bracketing the market, bots that are trying to break out of certain areas. And they're all run by different financial institutions with different size accounts to trade with and blah, 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 blah. So when you see a lot of bots, which is what we had earlier, where it's like on both sides of the market, you got the same size icebergs. You got 140 long, 180 short, 200 long, 120 short, 80 long, 260 short, 60 short, 55 long, 60 short, 200 short, 60 long. You know, when you start to see again and again, it's like the same thing over and over and over again. You don't know who they are, what they're doing, what their end game is, none of that, but you know it's shenanigans. You know they're playing some kind of game and that eventually it will break. And you must just wait and see which side breaks. Today it was a break to the upside. So now whatever game was being played, for whatever reason it was being played, that game is over. And the Bulls won. Congratulations, Bulls. Now we find out if they can keep it going. Can we get another one up here? All right. Well, with that, I'm probably going to wrap up the morning stream here. Does anybody have any final questions for me? As far as what I expect for the rest of the day, they have the momentum. They're going to keep squeezing and squeezing all those sellers from the overnight high. And then they will pull back down into support and we'll find out if they have buyers, right? And we'll just have to keep watching it one step at a time. Amir, it's been a minute. Good to see you. He says, how many licks does it take to get to the center of a Tootsie Pop? Well, I don't know, Amir, because I do like a minute of licking and then I bite. I'm a biter. So I know it takes one chipped tooth. All right, guys. I will be back here on the public stream at 2 p.m. today. We'll call it 1:55 p.m. I'll be back here. So if you guys want to come back and watch what happens with the FOMC, I have a feeling it's going to be a good one. I mean, I just cannot. As a matter of fact, let's just take a look at the daily and see how ridiculous this probably looks in the daily right now. Oh, yeah. I mean, just look at that. Beautiful. Market going up in an absolute straight line right until the FOMC. Beautiful. I'm honestly, I gotta be real with you. I'm impressed with the Bulls here. I can't believe they held that. We kind of expected it, right? We talked about it a lot when we were stuck in this range, you know, just going sideways forever. We were like, whenever this thing breaks, boy, it's going to break. But that is a pretty big break without any kind of pullback. All right, sayonara. See you guys at 1:55 p.m.